Hi everyone, my name is Donna and I'm the owner here at Bookkeeping Made Simple. Today I'm going to talk a little bit about the most scary thing that happens to us as business owners. And that is creepy music here. I've got to find some good royalty-free music. Creepy music here, the letter from the IRS. I mean, this is so scary. Even my letter carrier does not like bringing me IRS letters, and I have to laugh and reassure her, I'm an accountant, I deal with them. Well, it's fine. Or, or it could be another taxing authority. So we're going to go over what is included in these letters and when you should be concerned and when you should just not be. Okay, so first thing, understand this, they are kind of engineered to scare you. And the reason for that is if you get scared, you're very likely to just do what they need you to do. And so they may include a number of threats. They're kind of standard on these forms. We're going to lien your house, your property, your bank accounts if you don't do what we tell you to do. Skip that part. Okay. The first thing I want you to do, if you're one of my clients and you receive a letter from the IRS, please immediately scan it and email it to your bookkeeper. We will figure out what to do with it. But here's usually what I see, especially over the past couple of years, where so many things tax related have been just in flux. I mean, we don't know sometimes from one day to the next what is going to be okay, what's not, what kind of stimulus packages are going to be passed. If we're going to get more COVID money, what about the payroll protection plan? There's a lot of questions. And even for the professionals, there's a lot of questions. So the first thing is recognize it's a scary letter and open it and read it. Understand they are kind of engineered to frighten you because they're kind of frightening you into compliance is what they're really trying to do. So the next thing we need to know, what does it say? What tax period is it covering? Okay, it's not very likely that you're getting a letter today. This is May 31st, 2022 as I'm recording this. You're not very likely to get a letter about the 2021 tax year. It's possible, but it's not likely. But that's the first thing we need to know. What tax period are they referencing? Are they referencing payroll tax, income tax, sales tax? I mean, we get taxed on everything. What are they taxing? What do they have questions about? Now, I am going to point out they're usually sent out because something was not filed that should have been. Something was claimed that should not have been. There was questions about whether or not, especially with a divorced couple on income tax, should a specific child have been claimed by which spouse? Funds may be owed to a different government entity. Think student loans or past due child support. Those will be seized by the IRS and passed on to the garnishing entity. To notify you of a change in your tax return or any credits, or to notify you of an audit. Okay, so we're going to kind of take this in order. And the very first thing I want you to understand, and they do come in, they get more threatening as you go along, but this is important. The IRS will never call you. Social Security will never call you. Your state taxing authority, they might call you, but it's not very likely. They do not call. If you get a call from someone claiming to be the IRS, and I've gotten those calls too, and I've just laughed because I was like, oh, really, what floor do you work on? My husband's uncle's the main prosecutor for the IRS. And they go, oh, click. Or I will ask for a badge number. If someone does call you and try to say they're from the Internal Revenue Service or Social Security, and they say something like, oh, your Social Security is being canceled, it's not. They do not call. They send letters. I have heard we've laughed and told the scammer, oh, awesome, where can I sign up? I want my Social Security number canceled too. I'd love a fresh start. And they don't like that. We mess with them all the time. The IRS does not call, period, full stop. They go from sending letters to sending summonses, to sending an agent to your door. We don't ever want you to get to the point of summonses. We do not want you to meet any of the IRS agents face to face because they're at your house or place of business. We want it dealt with very quickly. Okay, so number one, understand the IRS never calls, Social Security never calls. So if you get one of these calls, it's a scam. The next thing is understand these letters go from least threatening to very threatening if you don't respond to them. Now, my experience has been that if you are talking to the IRS, you're on pretty safe ground. If you will talk to them, if you pick up the phone and you call them, or you give it to us, and we'll give them a call, we'll find out what's going on. A lot of times we can very quickly read the letter and tell you, oh, this is what you need to do. Other times we may have to say, we need to call, or you need to call. But if there is communication happening, you're usually on pretty solid ground. Where they get a little touchy is where you're not doing anything, okay? So, first thing, something should have been filed that wasn't filed. They will send you a letter and it will sound very scary. What that means is exactly that. You need to file that return, or you need to talk to us about it. Maybe we need to file it. A lot of times I see this happening with sales tax returns. I have a client that for some reason they have a sales tax account in Utah. Nothing they do is taxable sales in Utah. Why they have a sales tax account here, I don't know. But I think an attorney set up their account and just set up all of the sales tax accounts because they didn't know any better. So I have been advising this client, close your sales tax account. You don't need it. And then they don't, and then it's not really part of our agreement, so we forget about it, and then it comes up again. Oh, we got a letter from the state saying that we owe sales tax, and I go, no, you don't. You shouldn't even have a sales tax account. It is a zero due filing, and that means that when we file, we're going to say zero taxable sales, zero tax due, and that usually makes them happy. The other big thing that will, this one does come from the IRS a lot. Sales tax is a state or municipality only. Payroll tax, the federal government gets kind of touchy. So does the state government. That is a major source of revenue for them. So they want to make sure that you're filing. So they will email, or it's not email, they will send you a letter right away if you are missing a payroll tax return. That's called a 941. For the quarterly, a 944, I believe, at the end of the year. They want to make sure these are filed so that they know how much your employees have had withheld, how much goes to Medicare, how much goes to retirement. They need to know all of this. So you need to make sure that these are filed on time. And if you don't, again, they'll send you a letter and say, hey, we didn't get a tax return from you for these, first quarter of 2022, whatever it is. The proper response to that is to immediately file the return. Okay, if you need help with that, let us know. We're happy to help. If you're not going to have employees or sales or anything sales taxable, close those accounts. That way you're not getting scary letters for something that you don't need to worry about. If you are just on hiatus, plan on filing these zero due tax returns. And let us know. Kind of communication is really, really key here. We need to know, hey, I don't have any employees right now. I'm trying to hire. So if you just kind of keep up on that. But if you're not going to have employees, if you're getting ready to close the business, close your sales tax and payroll tax accounts. It will save you a world of headaches. Okay, another thing that does happen is if you're expecting a refund, but you have back child support, you have back student loans, you have back taxes due, the IRS will garnish that refund and they will apply it in a specific order. And it's usually child support for taxes first and then child support, and then student loans. So they will apply that refund to outstanding debt if it's one of those three. And it's I think it's only student loans, back child support, or back taxes. So you can, if you are a married couple and one spouse owes this money and the other spouse doesn't, you can file an injured spouse claim. I do not recommend it. And the reason I don't recommend it is, I hate to say it's free money from the government because it's not, but it's a relatively painless way to get those debts paid down. So I would go ahead and let it go, personally. So just because it's usually a substantial payment and you don't have to worry about coming up with the money later, you might as well just let it go and let it go to that other entity, whether it's child support, taxes you're kind of stuck with, but child support or student loans, let it go to make those payments. Just let it go, especially if a lot of it is coming from refundable credits. Let that go make those payments. It's in that case, it really kind of is just free money from the government. It means that money does not necessarily have to, you don't have to think about making these payments over and over. It's going to be sent to that entity anyway. You might as well just let it go. So that's my take on it. Let it pay your obligations so you can get out from under them sooner. Okay. And anyway, honestly, you shouldn't be using your tax refund as a savings account anyway. Something I need to bring up in another video, but I haven't yet. Okay, the next big thing is changes on your refunds or credits. And here's where it gets a little bit more technical. For 2020 and 2021, if you had children under the age of 18 still at home, you were allowed to take, you were issued stimulus money if they had your address, or you were allowed to take an advanced child tax credit. I highly discouraged accepting these funds because I have a lot of clients who just don't tell me that these funds were owed. Either they don't keep track of their letters, their receipts and stuff, or it didn't come to their house or whatever. If it was direct deposited, they just didn't think about it. They didn't put it aside. I didn't find out about it. And then I do a tax return and the money comes down and the client gets unhappy. There's a few things to keep in mind. Okay, one, I am just a tax preparer. Okay. Once that return goes to the IRS, they compare what's in your account to what's on your return. It's very hard to pull one over on them. Okay, if they have sent you money, they know to the penny how much money they have sent you. And they will look and they will compare. And if it is not listed on the return, if I didn't know about it, then they will adjust it. And they will send you a letter saying, we adjusted your tax refund. And this is why. Okay. Several families, this has happened to me several times where I've gotten a ton of stuff that none of it included stimulus money, advanced child tax credits, or any of these things. But just because you didn't tell me doesn't mean the IRS doesn't know. Just because it's not on your tax return doesn't mean the IRS doesn't know. They will look. Actually, you should have gotten several letters from the IRS prior to this. One stating you could have turned down those funds and said, no, I want it at the end of the year. You also should have gotten a letter at the time of the payments being made, telling you what was being paid. And you should have gotten another letter at the end of the year saying, hey, this is the total amount that we paid you as an advanced child tax credit or as a stimulus payment. All of those should have been submitted to your tax preparer. And if you didn't, or to be honest, if she didn't see it, then the IRS will look and they will say, oh, you forgot to mention this. We're going to reduce your refund. Okay. At this point, it's the end of April, tax season's been over for 6 weeks. The return's probably already been filed. So you may receive a letter explaining why your refund was reduced. Okay, and then the last one that I'm going to talk about is the dreaded audit letter. Let's talk about what an audit is. An audit does not necessarily mean that they're going to go looking through every little thing. Generally speaking, they are testing different accounts. They're looking to see if what you claimed on your tax return matches their records. Okay, and so there's a few ways that this can come out. One may be if you receive an earned income credit. If you're a low earner and you receive an earned income credit, by the way, highly recommended to take it if you're eligible for it. They will double check and they will look at your qualifying children. Did this child actually live with you for at least 6 months of the year? Are they in the country for at least 6 months of the year? This gets a little bit sticky when you have one partner in a marriage who's maybe a US citizen, a legal permanent resident, and another one whose documentation is a little bit questionable, who just has an ITIN, individual tax ID number. That could be, they may look and say, are you sure you didn't send that child to Mexico? Are you sure you didn't send the child back to the home country? Are both spouses here? They're really looking for that because the earned income credit is a refundable tax credit. Same thing with the child tax credit. They want to know which parent did this child live with? And if you are the non-custodial parent, that you have an agreement in place to receive that child tax credit, they want you to prove it. So really what an audit is they have some information and they're testing to see if everything lines up. Okay. They are going to look and see if you have completely weird withholdings or business deductions, such as my favorite one has always been a contractor who lived out of state. His residence was here in Utah, but he was always out of state working. And he tried to tell me that certain adult websites and escort services were a business expense, and was just shocked when I said, no, sorry. It's not. Unless you personally own an escort agency, nope. Unless you're Harvey Weinstein, nope. But they are looking for that. They're looking to see what you've claimed, why you've claimed it, and if it agrees with the current tax code and findings from the tax court. So it doesn't necessarily mean you're going to owe more money. It does mean you're going to have a bit of a headache because you will have to go back through and say, these are my bank statements. Let me prove to you that what I did was legitimate. But fortunately, they are badly understaffed, so I don't see any real audits coming through anytime soon, hopefully. Another reason for an audit right now is that everybody's working remotely still. We are just now coming back to the office. I have not. I've been working remotely for 20 years, so I'm starting to think about maybe I should get an office. But if you are, especially in the Northeast, right? So let's say your office is in New York, and that is where you've always had an office, and you've gone to the office. And now all of a sudden, you can stay at your home in Connecticut. And Connecticut is saying, well, you're paying someone that while they're working in Connecticut, we want that money. And New York, who is terrible, is saying, no, the office is in New York, and we want that money. Okay, so it's called a tax home, and there's some argument, particularly in the Northeast, about where the tax home should be when workers work remotely for the pandemic. Is this for the convenience of the employer, or is it for the inconvenience of the employee? Now, one, I have very few clients in the Northeast. Two, I work with business owners. I don't work with employees, but I will tell you that is an issue. So when you get a letter from the IRS, it's never if, but when. Don't panic. Open it and see what it says. If it's an audit, we can contest it. We can, what it's called defending it. We can go in and say, according to this portion of the tax code, this is perfectly okay to do. Okay. It does not mean that you're going to owe more money. It does not mean they're going to take your house tomorrow. It just means that they have some questions that they would like you to address, or there's something is missing that they need you to address. So if you look at it that way, it's either an informational thing or they're letting you know you forgot to file something. We're doing an audit because something doesn't look quite right. We need you to provide some more information. That's generally what that is. So there's really no need to panic. That is it for today. This is not my favorite topic, but I will, it's kind of bringing up some other topics to talk about. As always, if you enjoyed this, please like, share, and subscribe. If you're on YouTube, hit the red notification bell so you're notified as we work on these videos. I am really tickled to be able to share some of my knowledge and experience with you. And so the way we put out this information is by through our subscribers sharing and liking these videos. So thank you so much. I am looking forward to hearing from you.